What is up, everyone? Welcome back to the third episode of the F.R.E.E. podcast, Finance, Real Estate, Entrepreneurship. I'm your co-host, Sam.
And I'm your co-host, Andrew.
And today we're going to be talking about something that's been happening in the news lately. The Robinhood, whole debacle and kind of what free markets are and kind of our take on the situation. But before we do that, there is a fee for this podcast and you're not having to pay anything. We're just asking that you tell someone about our podcast, whether it's through a review, whether it's retweeting something, sharing a post, something along those lines. So let's kind of dive into this. Andrew, what do you think about the whole Robinhood situation?
Well, for those who don't know, one, I don't know what rock you're living under, but anyways, Robinhood sort of froze trading, buying of shares of a couple particular stocks for a number of hours, mostly because a Reddit thread was bumping those shares up and that price up of GameStop, AMC, and a couple other smaller ones, but the main one being GameStop, and they were making hedge funds lose billions of dollars. And so what my opinion on it is that if the market is free, then people shouldn't be restricted on when they can buy and sell their shares. It should be you should be free to do what you would like on the market.
Right. So
yeah, and whether that's on the Trade Commission or if that's on Robinhood, I don't know. But what I do know is Robinhood is facing over 30 civil lawsuits at the moment.
That's insane. Yeah, so kind of what these hedge funds did that kind of caused them to, just take a beat down is, so when you short a stock, it means you're kind of betting against the stock. So it means when it goes down, you make money. And that's kind of what they were doing with GameStop. However, they took the wrong route. They shorted over 100% of the shares that were available, which is just greedy in my opinion. And then when people started buying up these stocks, you shorted all these stocks. So now you have to start buying the stocks at the price right now. And then that just pumps it up even further. And that's kind of what happened with GameStop. And that's, my opinion kind of goes both ways. So one, it is a free market. We can't, if you're going to bail every single hedge fund out, if you're going to bail all these people out, what about the retail investor? Where do we get our bailouts from? We don't. If we make an opposite prediction on the market, we lose. And in a recession, we lose big time and we are left to deal with that for decades to come. However, when a hedge fund does it, they don't really get that, that kind of, downside of it if they just get bailed out by investors or whoever it is. So that's kind of my take on it. But the other side of it is, it's really hard. We saw in the news that, a 17-year-old kid committed suicide over this. He woke up in the morning, he was trading, and he woke up to over 700,000 losses on his account, and he had no idea why. And this is kind of the thing that we have to talk about is these people weren't educated enough to understand the two things, options and margin, and that's where it got in trouble. So I don't know. It's really kind of both sides. I'm all for a free market, but do it smartly. And like anything, do your own research.
Yeah, exactly. And that's why it was so surprising to see something like that come out of just a Reddit thread, is because you wouldn't necessarily expect that level of knowledge and education. And there were a lot of people that were investing that did not have any knowledge and just were bandwagoning. But just like you or me, like you said, retail investors. So if we lose, then we just lose. And so a hedge fund is effectively another legal entity, a person the same as you or me. And so that's why I view that they shouldn't get the bailouts if a regular investor wouldn't. So if I had shorted 150% of the available stock, then I just lose and I basically go to jail because I'm in debt so badly. But anyways, I think that should be the consequences that hedge funds or Robinhood. And something that I thought was pretty interesting is, why do you think that Robinhood was targeted so much when some of the other places were freezing investments as well?
That's exactly what I was thinking. It almost seemed unfair to me that people were so targeting Robinhood when Webull Fidelity, Schwab. I mean, all these other big brokerages were doing the exact same thing. They were stopping trading basically of these few stocks for hours on end, but it was Robinhood who was really taking the hits and is now being sued, 30 times or whatever you said. But I think the biggest difference was Robinhood was built on the foundation for basically the little guy. The retail investors, the beginners. It's easy. It has an easy interface. And that's kind of why I think they took the hit.
I
You're
mean, hence
called
the name
Robinhood.
Robinhood.
Yeah, you're
Yeah.
called Robinhood. And in that situation, you basically took from the poor and gave to the rich. It's kind of ironic in that situation, but I personally don't think that it was only Robinhood's fault. And I think they got a lot of heat that some of the other brokerages definitely should have gotten.
Yeah, I completely agree. I completely agree with you. I think that Robinhood is rightfully facing a lot of heat, but they might be facing more heat than they deserve. It should be more distributed. What I'm interested to see is sort of what the back channel was to make that decision to prohibit trading at that point in time. So was it a direct communication from different hedge funds? Was it even from the government? Was it who was it from? Um, and what implications that'll have in the future on who is able to control the market.
Right. I mean, I don't think we'll ever see anything like this short squeeze again. I mean, GameStop went up thousands of percentage points in a matter of a week or two. I don't think there will ever be a situation like that. And I think hedge funds will think twice about this stuff because if there is a room for arbitrage or there is a room to squeeze a stock like this again, oh, you can bet your ass those redditors will be all over it.
100%. They've already been on four or five others. I mean, even Dogecoin. I mean, they've been just pumping money into that, and they've even gotten some really big people like Chamath on Twitter. He's a big startup guy, and even Elon Musk. They're all talking about it. So they definitely have some sway and some power, and I think that they're just going to keep gaining more and more as time goes on.
Oh yeah, definitely. Now I have to ask, what do you think about, maybe the semi downsides of a person like Elon Musk having such power over the markets by a single tweet? I mean, he pumped Doge from 3 cents to over almost 9 cents in a week by a couple tweets. Do you
Yep.
think it's right for someone like that to have that amount of power over the markets?
It's really interesting that you ask that because it's actually an assumption of the free market that that's impossible. So there are a couple big players that can do that. Warren Buffett can do that as well, just because of how much capital he's commanding. Bill Gates can do that, and Jeff Bezos, and so can Elon. And Elon does it not by his own money and moving his shares and his capital allocation, but instead he just tweets and just talks about it. And he's such a sensation that he can make anything take off, doesn't matter what it is. Um, I think that it's not good for theory. It's really bad for the study and the regularities of finance, but I think it's really interesting to sort of see how that works socially and to see people sort of get behind somebody just for the sake of getting behind them. What do you think?
Right. So it kind of begs the ultimate question, is it actually a free market? I mean, if
Yeah.
we have people like this who can move the market and they choose to do so at their will, and obviously there's probably some restrictions on them, what they can't do. They can't do pump and dumps like, what we just saw. But do you think it'll ever be regulated? Like, do you think, the SEC or some type of governmental entity will go to Elon and be like, you gotta stop tweeting because this is not normal. You are artificially hyping up these stocks, this cryptocurrency, and it's not right.
Right, exactly. For your question of is it a free market, I think that maybe in theory it is, but in practice it might not actually be. And and there are probably restrictions on them, and it would be interesting to see how the government would regulate that. I think that maybe it would look sort of like what happened with Robinhood, but doing that on a larger trade commission level. So sort of halting irregular movements, which would overall stabilize the stock market a lot. But as soon as you do that, it becomes even less based on how companies are actually doing and much more just on the speculation of their value.
Right, right. So, kind of back to Robinhood, the SEC is putting all this stuff out. There will be punishment for this, there will be investigations. Do you think anything will actually come from that or from the future of investing? What does that look like?
I think there's too many trading platforms that got nailed or that did very similar things that if Robinhood did anything, they would just settle out of court for a fine. Um, I was just more than the consequences of that, sort of legally. I was thinking, what do you think the consequences will be with their trading base? Do you think people will still use them, or do you think people will leave? Or maybe they'll open up a new market for somebody else to come in and fill the Robinhood space.
Yeah, there's a bunch of different avenues there. I mean, when we saw, Robinhood kind of taking, a tank there, I read something that Webull had, a 16-time increase from, their basically their members signing up. And that's insane because you saw a huge amount of people moving from Robinhood to Webull. And I myself was one of those, actually. I just didn't like them.
Yeah.
And I actually heard about, were they actually selling off people's positions without their knowledge? Because that's where I didn't know if it
Yeah.
was true, but that's where I just drew the line. That is not okay. That's without consent. That's,
So Robinhood has a clause in their user agreement which sort of allows them to do that, and what they can do is they can sell your shares at any given time that you own because you've done it through them in order to hedge against loss. And so that's I don't think that's okay, and I don't think people knew that, and I didn't know that, but that's definitely not okay.
no, I didn't know that either. I'm gonna have to go look at that user agreement through all my other brokerages. We'll
Right.
see if Fidelity does it. I mean, is Webull doing it? I have no idea,
Webull
but
does not do it. Webull will let you go to zero, which can be good and
no.
can be bad. Yeah, but Robinhood wasn't hedging against people's losses any other time. So
Yeah, they're walking a very fine line there, and that's where I kind of drew the line. That's where I think they should definitely be getting all the heat is if you're selling off people's positions and they have no idea and they wake up to a notification, "Hey, we sold off your investments." Wow. I
right.
would be furious.
Yeah, and that sort of begs for the question as well of, do you think that there's any space in the future for another market to open up, sort of in the way that more currencies have opened up without being centralized? So like Bitcoin being decentralized. Do you think that it's a possibility for one day to have a decentralized market to where nobody can sort of prohibit these things and retail investors can trade amongst themselves as well?
If it ever does happen, it'll be extremely volatile. I
Hmm.
mean, there will be 30% gain days and 50% losses the next day. I mean, it will be insanely volatile because there's no regulation, and a lot of those people will just be in there to make some quick bucks and not really build that long term wealth. So I have no idea if there is an open market for that. It'll be really interesting to kind of see what it is, and that's kind of the um, big factor for Bitcoin and the big pusher for Bitcoin is it's decentralized. But as far as the whole investing platform, it'd be really interesting to see, but I can't really see that ever happening, to be honest.
Yeah, at least not on a widespread scale. I mean, I could definitely see some geniuses going over and writing some sort of code where you can trade um, on a completely different platform and do so completely freely, and I could see people doing it on a much smaller scale just sort of for day trading and swing trading. But like a lot of other investors, I don't know what's your position on this, and I'll ask you that right after this. But on day traders, what's your opinion on them? My opinion is that they lose in the long run. So I was just wondering what you thought about them.
Yeah, so statistically, they definitely lose in the long run, and this is where I kind of have an unpopular opinion is I do see day traders as investors, unlike a lot of people who see them as gamblers. I think the difference between investing and gambling is investing is backed by some type of logic and analytics, while gambling is purely emotion based. And as long as you're doing some type of analysis, whether it's PE ratios, you're looking for some type of arbitrage there. I think it is investing. However, over the long term, statistically, they do lose. But that doesn't mean, if you're 20, you're 21 years old, why wouldn't you add something to the S&P 500 index, just put that in your Roth and then open up a taxable. And why wouldn't you try and beat the market? I mean, you might as well, whether it's through some type of tech ETF or, some up and coming stocks or some industries. By all means, you're young, spend the next 3 to 5 years trying to beat the market. You already have the market's return within that Roth. Why not try and beat it within your taxable brokerage?
Right, exactly. And that's a really interesting take on that, and just sort of doing that for your own research and financial literacy could be really great. Um, I think that it's pretty interesting that a lot of people sort of saw, or I know at least 2 or 3 people in my personal life that have had over 30 times returns over 2020. So, I mean, some of the people have had really, really great successes and sort of, um, to note on the gambling statement that you talked about, I don't see them as gamblers either. And the reason why is because if you are at a casino gambling and you're card counting, doing some sort of analytics, then you get kicked out because that's not gambling at that point. You're playing a system. And I think that sort of the market and trading on that way and sort of even knowing about the companies and what is going on in each industry sort of disqualifies it from the gambling notion. So that makes it much more respectable in my opinion, especially to see some of these really big returns, even though they might be hiding their big losses. But it's still really impressive to me.
It is impressive. I have one rule that I live by with day traders is if you're going to show your portfolio, you're going to show your losses and gains, make sure you show your losses. If you're going to show
Right,
me that 300% gain, you got to put, that 150% loss that you had as well. I mean,
right.
just full transparency with day traders is kind of what I'm looking for. As far as long-term investors, 10 years, I mean, you're looking long term, so I don't really care what you made in the past 6 months, year, or
Right.
whatever, if you're looking long term. But day traders, that's my only stipulation. You're an investor, but if you're going to show your returns, you're going to show that gain, gotta show the losses.
Yep, I completely agree. Completely agree. And that could be something interesting that we could do in the future is sort of have a series where we talk about what we're doing in our portfolios and even showing exact I would be open to opening a new portfolio and maybe putting $1,000, $2,000 in there and seeing what we could do with it. So
Yeah, maybe we'll have a free podcast portfolio for you guys. We'll do a
yeah,
couple YouTube episodes on that.
yeah,
Open it up, and we'll see what kind of returns we get. We'll see how smart we think we are.
right, exactly. And if you wanted to keep up with the things that we're doing and sort of where directions we're going in, and if we decide to sort of do this new portfolio, that was just a thought out of thin air. I was just thinking maybe that'd be interesting for our listeners to hear. But if you wanted to do that, check out all of our social medias. I mean, we're on YouTube, Instagram, TikTok, Twitter. We're on everything. So go check us out and stay updated with us on that.
Yeah, absolutely. And I think with that, we're going to conclude this episode. Hope you guys liked what you heard. And if you did, go ahead and subscribe to the channel, leave a review, like it, share it, do all that stuff. But we'll see you in the next episode.
We'll see you.